Share my 44 years of experience to help you manage your portfolios and protect your wealth. Remember to subscribe, like, and share these videos. In tonight's video, I'm going to cover the window dressing that we saw started today, and also I'm going to go through the most important thing, which is having a sell discipline, and we'll be reviewing stocks. We'll do a slight macro overview. Let's get into tonight's video. Welcome everyone. In tonight's video, we've got a number of things to talk about. I think we finally saw the emergence of the window dressing that I've been talking about over the last several days. The patterns that we've been seeing, this very choppy pattern I went through last night, continues to suggest that there's some vulnerability in this structure of the markets. Typically, we'll get stronger environments from the standpoint of the momentum that we're getting out of the markets. We don't have any true momentum, at least on a short-term basis. On an intermediate-term basis, we're seeing a number of things. And last night's Substack, I talked about this, and we'll go through a little bit of the database from the standpoint of what the rotation that I'm seeing. But we're actually getting some negative pullback. I wish we could see tonight's run, because I think we're going to see further move down in the percent bullish on the markets. So I think that'll be quite a reviewing. So once again, I'm going to tell you, get the Substack, because that's where I do all the micro analysis. We stick to a bigger picture here. Just looking at a couple notes before I get into tonight's video, while the room's filling up, is there will not be a live stream tomorrow. I am going to be out of town. I don't think I'll be able to make it back in time and be able to have any context of what's going on. So here's what the plan is. Thursday, 2 o'clock, we'll do some live trading like we did last Friday. And of course, we have a long weekend from that standpoint. So let's talk a little bit about what we saw today, and we'll go through some numbers. But we had 599 sell signals come out last night on the daily, which pushed us down to, looks like 54.41%. I think we could see another attrition today. It was interesting market today. We saw the market trade up early in the session. Looked like we should have an up day. We traded all the way to S3. I'll show you those numbers here in a minute. We'll go through the S&P. But we traded all the way to S3, and then we rejected from there all the way down. In that last hour of trading, we saw just a massive amount of selling. And of course, there's something to be said maybe with the Baltimore bridge situation and having a major port in the U.S. shut down. There's going to be a lot of disruptions around that. Maybe that had some influence with as far as what was going on in the markets today. Certainly there's a number of things that are going to happen. And once again, maybe there's some concerns about inflation, supply chains, and all that. It looks like it's going to be a big deal what happened there. It's too early to actually make an analysis of it, but certainly I think a combination of the end of the quarter and a lot of other things are pushing folks to be able to look to take profits on the markets. So I think what we'll likely see maybe some follow through. I'll lay out some numbers to watch for to trigger the follow through, but for the most point, it looks like we're doing the same pattern over and over again. So that would suggest that we're going to see another up session. So we did get 3 days down. I thought yesterday would be the turning point. It looked like it all day. Yesterday meaning today. Yesterday I thought today would be the turning point. We traded up into that resistance, and then, like I said, we got rejected from there. So we'll see if this is part of something larger or not. But one of the things I'm also going to discuss tonight is the need to have a really solid sell discipline. And matter of fact, I'll just go into a little bit of a discussion about that right now, because I think that is probably one of the most important things. This is something that I have been suggesting as a strategy for a long time. And I know a lot of our institutional accounts still watch this show. And I have been telling you for years, you have to have a sell discipline. One of our longest user of one of the guys that have used this product, my WaveTech and Portfolio Expert product, the longest, always has said, he goes, I don't care if you don't do the buy signals that come out of the system, but never ignore the sell signals. And when you're sitting here at all-time new highs and maybe a little nervous and you don't have a sell discipline, I'm going to tell you, you should have. And we'll talk about this more. I'm going to bring up WaveTech. It's a really cheap way to have a sell discipline on 15,000 stocks. So while it's going to sound like a sales pitch, it's really more than that. It's about actually protecting your assets. And anybody that was around me in the last 10 years knows that this is a key element in preserving your capital. And so I'll make a case for that when we bring the product up. I'm looking at some of my other notes here. One of the other things that we'll do in tonight's video, and I'm trying to keep these nightly videos down to 30 minutes. I could have finished last night, but I kind of got into an educational type situation last night. And so we'll do tonight is we will cover some stocks. I'll look for some suggestions. I've got a short list of things to go through, and then we'll start to get into more of this analysis and having the sell discipline discussion. So let's go ahead and let's take a look at WaveTech. I want you to see what's going on there, because I think that's going to be important. And yeah, let's just go ahead and get into that. Yeah, so looking at WaveTech, I know this is fairly small on your screen, but this is the daily database. We're at 54.41. My guess is that we'll see a fair amount of selling after today's action. That last hour dump that we saw was pretty dramatic, and it looked like it was broad-based from what I could tell. If we look at the database here, last night, like I said, we had 599. I think we could get another 4 or 5% dump, put us down to about 48%. And the key numbers I always talk about on the short-term database is 42%. Anything under 42 suggests that we're going to get a larger sell-off than what we normally would get. So if we stay above 42, I would just tell you that we're going to maybe grind here, but we're coming into, I think, a key element as we come into the final trading day, since we have a shortened week on top of that. And I believe there's some substantial news that somebody actually was suggesting, I forget what it was now, it comes out on Friday when the markets are closed. I think it might be PCE, which would be really interesting strategy. So as we look at everything that's here on the screen, we're continuing to see quite a bit of the sectors. There's 11 of the 12 sectors are long, and I want to talk about this. I almost brought this up in last night's Substack, so remember to go to kendallreport.substack.com, get the free 7-day trial on the newsletter. Make sure you get that. That's where I do the micro analysis. But if we look at this sheet here, you'll notice there's 3 sectors that are in red, which is underperformed, means they've met their holding periods and most likely have exceeded some of their expectations on the returns for as a total sector. But then there's also one that is down here, which is services, which is on a hold, which means it's met the average returns and holding periods. It has not exceeded it as of yet, but we're into that range where things start to get a little sketchy. So out of the 11, we have 4 sectors that are potentially could roll over on a short-term basis. And for the most part, give you example, healthcare has almost doubled its normal holding. It's at 87 days. It's at normally a 45-day holding period. So that's exceeded by quite a bit. The same thing with consumer cyclical, same thing with capital goods. And we're right at that mark, about to go into a hold period on basic materials. So this is important to understand because these are sectors that are extended. If you're holding stocks in this area, you definitely want to be looking at tightening up stops. And I will talk about a couple strategies that you can use to protect some of your assets. But this general setup on the database is really important to understand. So before I go, let me come on screen here, but before I go into more detail on this, let's do a quick overview of the S&P and Nasdaq and go through the markets really quick. And then what we'll be able to do is to set up this going back to the database and talking about sell disciplines, and we'll get into some individual stocks. Okay, so let's go ahead and let's switch over and let's take a quick look at the S&P. So here's that crazy pattern that I showed you yesterday, and we're basically looking at everything starting to flatten out. But this, once again, we've got 3 bars down. We actually have 3 bars down. We've got an up bar right now. The current, this is a daily chart. So the current, we're up right now, 8.25. I did a tweet right at the close today, and the hourly chart, absolutely, if you folks have these indicators, you should have caught that sell-off. It was predicted about an hour before it started that it looked like the algos were suggesting on PPM1 that we were going to turn down. I can show that to you here in just a minute. But this was absolutely predicted. But also after the sell-off, when I tweeted at the close, I basically said the forecast was for a recovery, for the markets to recover from those lows, which they're doing right now. We're back to 73, and you'll see if I just go through yesterday's range, if you look over on the right-hand side, you'll be able to see the market grid numbers, but 52.97 was R3. We actually printed 5,300, and then on the downside, S2 was 52.65 and S3 52.58, and this got us down to low is 52.63, so just above the S2 level. And now we're, as we look at today and start to look at the expectations, we're looking at R1 as 52.71, so we've already printed R1. We also saw the market grid continue to turn down, still staying fairly narrow, so that's why we're able to print this S3 almost, R3, S2 levels, because they're so narrow right now. We're still not seeing an expansion of volatility. We'll probably get a little bit if we can start to see the range fulfilled again today, but we're looking at probably somewhere at the moment around S1 is 52.58, so we could print down. That would also put us right at the 10-period moving average, which is 52.55. I'll bring up the PPMs here in just a minute, but we're looking at the upside being limited as well. R2 52.72, 52.86 on the upside. So it will be interesting to see if there's any additional selling coming in. So let's take a look at the PPM. PPMs on PPM1 is suggesting to go up just slightly. So let's go over to that hourly chart I just mentioned and just see what we can set up here. This is what this big red bar here. We saw this giant red bar down. If I go back to PPM1, you'll see right before. I'm going to do a replay on this just so we can see this come in. I want you to see this, because this, I've been telling you, there's something called the V trade. When it turns up, we actually got a little mini V, and that was the rebound that we've already seen in this last hour. But I just want to run this script for just a minute so you can see this. And this was coming in. All right, so we got a little uptick here, and then from this point here at 9 a.m. this morning, that's Pacific time, by the way, this is where everything started to turn south. We had Fibonacci targets on the downside on the hourly, and then we got this next bar. If I can, I'm hoping it won't go 2 bars on me. 1 second here. All right. So this next bar down, all of a sudden we saw the PPM1 flatten out, but you can see the projection for the, let me just draw this in so you can see this a bit. I'll make it a little bit bigger. But the projection here, you can see, was heading down to a V, which was taking us into the final hour of trading. So it looked like we were going to get a sell-off into that pattern. It was an absolute great set up for a sell-off here, and we were looking at the potential of going down to the 200-hour moving average. So let's run the script a little bit so we can see this. Okay, let me fix this PPM so you can see it. So here we are, this big downward bar. We're starting to see, we just blew this thing away. And I'm telling you, if you were watching that thing and watching the order book, they just demolished anything that looked like a bid. And then the bids disappeared. We saw no liquidity in the markets whatsoever. Everything just dried up. And it was sellers, what we used to always call sellers over. And it just, everybody was selling. The bids were backing up. And it was just chunks were disappearing out of the market. So as I'll run the script, just one more ticket, and this was, all right, so this is where we came into, and you'll see this PPM1 here. I put a cursor by it. That is where you get that, I call it the V, that's the V buying opportunity. So that was being forecasted before the bar actually happened. So you're sitting there, and I have a clock that I run on my machine. I use TradeStation most of the time in trading, but I'll have a clock and I'll have the algos running on my other screens over here, and I'm usually trading from this platform. And when I see this V coming, that's where you want to be looking to buy. And I was like a buyer in that last 10 minutes or so, and starting to see a rally up because this thing was turning. And that's when I tweeted right at the close, hey, it looks like a recovery as we come into overnight trading. So let me just run this script the rest of the way so it'll finish out. And you'll see we get a bit of a burst. This should be, I believe that's real time right there. Yeah, so that's real time. We got that V bottom, and now we've got some recovery. We're probably going to come up to the 10-hour moving average, and that should be the trade. But you want to watch for these things because these are huge moves that happen. And I think as we go through what we're looking at right now, if you look at what the algos are saying on the hourly, is that you see they're turning up. It looks like we're going to retest that 10-period moving average. That number right now is 52.83. That puts us up to those R2 numbers that I was just talking about on the daily. So let's go back to the daily here real quick. So on the daily, 79 is R2 and R3 is 86. So it is actually projecting that we're going to get up to maybe the R3 numbers on the upside. Yeah, so thanks, Dominic, on that. So Paul speaks on Friday. That'll be interesting, maybe make for interesting opening on Sunday night. So this is this pattern. I'm just going to bring this back up full screen. This is the pattern that I've been talking about, where this literally is the whole year has been this stair-stepping pattern. And it's absolutely probably one of the single most unorthodox patterns I've seen for a while unfold. And as I said last night, it's no surprise that a lot of folks have been chopped up in here. If you just were long and bullish, then it all worked out for you. But if you were a trader, you were probably getting short at the lows and buying the breakouts, and only to be caught in a reversal. Just like the other day, we got this 3-day reversal right up to the Fibonacci target. We came $4 short of this fib target up here. There were these dots, these green dots up here at the top of the chart are, and then we rejected off of there. Now we're coming into the moving average again. 52.55 is going to be a pretty big number to watch tomorrow. So watch the hourly chart with the at least PPM1 on, and look for some kind of, if that V bottom's going to follow through, we're going to test that 10-period moving average. You should be able to figure out some of that stuff. So as we go through the Nasdaq, we had a pretty nice day going earlier in the session. Of course, everything got crushed at the close. And this is the daily chart I have up here. That same stair-stepping pattern, a little more exaggerated because you have a little higher volatility level on the Nasdaq than you do some of these others. But same scenario. Looks like we've got a neutral to up day as we come into the end of the week. It looks like there might be a print to the upside, but I think everything's somewhat vulnerable at this time just because of the extension on some of these stocks out here. Let's take a quick look at the hourly chart since we spent some time over there on the S&P. So you can see here, looks like the algos are suggesting a little bit of a rally, but this downward shape here on the 10-period moving average is going to be your key number. So if you watch the 10-hour moving average, that should be your resistance point. You break above that, then you have a shot at going up to the 21. But it looks like there's going to be a fair amount of resistance here. And like I said, my expectation is that we're going to see some selling come into WaveTech tonight, and that will be fairly material. So let's do this. Let's go ahead, and I'm going to go through the basic markets I cover every night just to keep things rolling. And I'll go through treasuries, and we'll take a quick look at Bitcoin, and then I'll come back and we'll talk some stocks here. So let's get into the daily patterns here. I mentioned in last night's Substack that we're probably in a range of around top end around 4.30 to 4.20, kind of a 10-point range. We move back to 4.23. We're starting to see this thing fade just a little bit on the dailies, and more than likely the pattern that's emerging here is this rising 200-day moving average right in here is going to be key. That's currently at the 4.21 level. So we break below that. The extremes that I mentioned in Substack last night is around 4.10 to 4.05. Maybe ultimately we can get down below 4%, but for now it looks like we're going sideways. But you can see the algos and the moving averages are being projected as far as the patterns go to the downside. So there's more downward pressure than upward pressure on yields at the moment, and that's interesting in itself. All right, let's go to Bitcoin, then we'll come back and we'll do some stocks here. So Bitcoin continues to have a really good bid. I mentioned in Substack last night that we still have a possibility of rendering a new high in here. We did get, we had a pretty decent day yesterday. Let me just bring up these numbers. We had, the high was 71,213. Today we had a high of 71,572. There's Fibonacci targets just above here at 75,241. If we printed that, would be another new high in this pattern. But look at the algos. The algos are staying fairly positive here, and it looks like this is just the bid with the halving event that everybody's talking about. And we'll see what ultimately comes out of here. I almost think that we're going to get some sort of pattern to emerge out of here, that maybe will be some backfilling. The algos are suggesting, but it's out in early next week when we get to that point. But the three targets here are right now for 75,241, 87,73, and 84,190. Those are pretty big numbers, and those would be new highs. Now, I've mentioned this in Substack as well. This pattern that is on the weekly chart here, just bring this up, this big market grid pattern that is out there. This is really what's, in my opinion, driving the market right now. We've been up to, R2 is 71,902. The high so far has been 71,572. So we basically done an R2, and on the downside, we still have we had a low of 66,407 and S1 64,963. So we're trading in this sideways range, and I drew this in yesterday when we went through this, but I do expect this to continue to basically consolidate. And even though we could render a new high in here, I think we get rejections off the new highs. The new highs will get rejected. I don't think we get another big surge, but with all the new players and ETFs and all the craziness that's running around this market right now, we could see momentum just blow up. And certainly within the market grid, 74,391, 76,16 is just the S3 RTX in this pattern. So I would expect to see this whole thing just kind of stay within this range that I have up here. PPMs are kind of confirming. You can see this sharp angle of attack to the upside. So we're definitely seeing the pattern of the best way to put it is this very giant consolidation phase, and it does look like some kind of peak coming at the end of April, but this is going to change as we go through it. So for at the moment, I see, I talk about this pattern all the time. When the volatility blows up like this, it needs to contract to a more normal range, and then once it does that, then we'll be able to determine the breakout, what the directional movement is going to be. All right, so I come back on screen. I'm glad we were able to get through the markets pretty quick. I could end the video here and have a successful stream, but here's what I want to continue to talk about this situation that I think is important for everyone to understand. And I think I figured out that the range for the daily cost of WaveTech is, let me just come back over here. Daily cost of WaveTech is actually $3.23. And what we do is there's no free trial on this, but what there is I'm just trying to get this screen so it works well, so I can be on screen with you here. Bear with me 1 second. I have to resize this a little bit. Yeah, so for $3.23, I'm suggesting it's probably worth it. It's going to cost you just 5 trading days, so it's going to be like $18 for the end of the month. But if you go to kendallreport.com/WaveTech, get this thing, because I think in this next month, as we come into some of these patterns here, that it's going to be important to make sure you have this, have a sell discipline. I can only cover a few stocks in a half-hour video. This is the good news. We cover 15,252 stocks, and that is going to be, I think, really helpful for a lot of you. And so I'm going to talk about a couple strategies to do here. So I'll come back on screen for a second. One of the things that I think is important from the standpoint of the markets to have in place is, let's say you have a stock, you have a good position, and you can go to our daily signals. And what I would suggest if you're doing options is they do a covered right. If you get a daily sell signal, you do a covered right on that, and you protect some of the downside. That will be your signal when you get a sell from WaveTech to put a covered right on. And then if you ultimately get a sell signal, then you can you can take off part of the stock, you can put it into a ratio trade, but more importantly, you just downsize your stock or get out and leave the calls on for them to expire, with the idea of rebuying when the short-term buy signal comes back in. So what you're going to be able to do is to get yourself to scale in and out of these trades. And it's going to be mechanical. You have to realize that I built this product for one reason. I built it for me. I was talking to my buddy Dave, he and I developed this platform back in 1995, 94, 95. And the whole idea was to be able to manage a large pool of stocks. So I'm not going to get into some of the concepts of portfolio management tonight, but I just want folks to be protected, because I'm realizing as we're sitting here and being all smug and talking about how if I go over to the weekly database that somehow it's 87% bullish. Well, most likely it's overdone, and we're going to start to see some type of contraction, and there's no way. I really appreciate, I don't know who it was that sent me the email, said, hey, I love your macro, but you don't tell us where the rotation is. There's just absolutely no way. If I come over to, I'll bring this up on the other screen here in just a second. So let's come back over here. So what I've got up here right now is I'm trying to stretch this out so we can see more of this screen on this view. Bear with me. Yeah, so what we've got here is all the buys and sells. So there's 22 pages, 433 stocks just on one model. So you want to do something. If you do decide to come on board, it's kendallreport.com/WaveTech will get you here. Like I said, it'll be prorated to be about $18. You can cancel it before the end of before the new month start and not get billed. So I would say it's worth expenditure of $1.20 or so for this next month, because I think as we come into April, things are going to get a bit challenging here, in spite of some of the optimism that I have promoted here on the channel. This is the best way to give the discipline to you so that you don't miss these things. And as I quoted earlier, one of our institutional folks that have been with us for literally over 20 some odd years said, I don't care if you do the buys, but don't ignore the sell signals when they come out, because those are very important. So you can use the dailies for covered rights or to take off part of the position, and then the weekly sells, and you just want to probably get out and reposition on after the market's corrected. So I'm not actually predicting a market correction, but I realized after watching the market environment today, and I talk about this a lot, is that the patterns that start to come out, I've been through so many cycles, I start to see these things. When I saw that heavy selling coming in, even though we got a little bit of a bid back in, we're still looking at this rotation. And as we come into a new quarter, folks are going to be getting more nervous. There's people talking about the Fed lowering yields. I've been talking about that. I think at the June meeting, I think they start to do some things. I actually think they're quietly tapering the QT in the background as well. So I think there's a number of things going. It's not that they're worried about the market so much. I think we've hit the threshold where they need the balance sheet to be. And that's what I've been telling you for a while, that the QT is way more important than the dropping of yields. All the dropping of yields is doing is adjusting some of the costs in the internal costs of the banking system. Other than that, there's no real effects to the economy on that front end of those yields. So, but the main thing is on the back end, if we do get some QT relief, meaning they stop selling as many securities as they have in the past, then you'll get to that point. So let's talk a couple more things that I just want to bring this up. As we look at the WaveTech product here, this is probably one of my greater concerns. We're at 87.65. I have been spouting off for weeks that this is a phenomenon that I've not seen for a while, and it goes back to really into 2021 as we were coming into the end of the year. Those of you who've been around the channel for a while, you know that I turned pretty negative in January of 22 and stayed that way for the entire year, and then turned that around in 23. But it was all about this intermediate database, and this is an important thing to know. So I'm going to bring up a chart as I go through this. I think it's one of the more important things that I could talk to you about. If I can find this efficiently, I will bring it up. Bear with me just 1 second here. I have it. So this is something that I've talked a lot about, is this historical type. Let's see if this works when I come over here. Yeah, so this is the historical map for the database. So where I think we are right now, we're still at 87%. We're probably this at the point where we start to see some kind of move down here in the database. Typically the market keeps going up, but I think in this case we're going to see more of a flat just because of the levels that we're at. This is a more typical range and expectation you get when you're in a what I would call more normal configuration. So let me explain that. So let's say if you were in a market that wasn't at all-time new highs, then that would be most likely that would be the point where you would see this rotation and the market keeps going up. Since we're at an all-time new high and we're starting to print some numbers that we're up year over year now, we're over 40 some odd percent if we go back from last year. This is a pretty big move. So I think we're probably more at the top arrow here where we start to see some attrition and the market starts to back off and we see the database come into more of a normal configuration. And that's going to be, we're at 87% right now. That's going to suggest that we're maybe going down into the range of 78, 72%. So some rotation. And when I mention the term rotation, what I'm talking about here is that we're starting to see some new buys, but also some exits. And there's no way like I said, for me to go through hundreds of stocks since our database is so vast and we cover over 15,000 items. And that includes stocks, mutual funds, ETFs, and bond funds are in there as well. But all of those symbols are represented in this database. So I think we're at a very interesting place in time from the standpoint of where the market lies. So I thought about coming up for tonight, and I thought, I don't, while it is a sales pitch, it is a resource that if you use it in the right way, you can do some amazing things. Somewhere down the road, we'll talk about using it as it was designed to be used, which is as a portfolio management tool. And what I'm doing right now is just saying, hey, I used to always compare trading to boxing. When they start every boxing match, they always say, gentlemen, protect yourself at all times, even after the bell, right? It's the same thing here with the markets. You want to protect yourself at all times, and that's what I'm talking about from the standpoint of being in a protective mode here. And so just know that this is my purpose of trying. I tell you, I'm going to help you protect your portfolio and your wealth. How do you do that? This is how I do it. This is a legacy product that we have. I can tell you there's some exciting things going around in the background here right now that I will be revealing to you as this year unfolds. But this is a very significant way to try to protect yourself. So let's do this. Let's go back to TradingView and let's cover a couple stocks. What time are we getting to be? 41, we got time. I'll go through, and when we're ready, I'll do a few of your stocks and requests, but don't put them in the timeline yet because they'll just get lost. So bear with me for a second. All right, so got to do Tesla. Tesla is actually getting a pretty decent rebound, and I talked about this. We went down to the 163 level. We're coming right into resistance now. The algos are suggesting that we're likely to get up and trade back up in this pattern. I thought we would get to 180. We have done that so far. We got to 84.25 today, and the key level probably in this pattern is way up around 205, and that would be very positive if it were to get there. But it does look like this is a weekly chart. There's still some pretty heavy resistance here right now because the PPM is at 1.8% down, or 1.83. And that suggests that there's only about a 20% probability for the market to get above that. That average 184.67, the high 184.25. We got a rejection all the way back to 77 just off of that level. And I believe that happened mostly today. Yeah, I think that was today's action here. So we also had on a daily basis had some upward targets. We had a fib target here. We had the 40-day moving average right now at 185, so we got up to that, and we had fib target 184, and then 192 on the upside, with the extreme of 198 puts us back up around that 205 level. So we'll do a couple of things here. I'm not sure. I'm going to bounce back and forth. I'm going to put WaveTech back up. And just kind of curious. So Alibaba, somebody mentioned this. We actually got a sell signal. It looks cheap for sure. This is the weekly. We actually got an exit on it for Monday's opening, so don't have any position. But this would be actually a real good way to let's go up and let's put it on a daily and see what we're doing daily here. So daily got an exit. Let me go to 3.2. This is fair rating on this. Yeah, so nothing's very good on a daily, but what I would look at is you can watch if 1.2 comes back in, look for a buying. This is kind of a terrible noisy pattern down here. Weekly looks a bit better. I didn't mean to do that. Let me go back. Yeah, if you look here, it's at least basing out. Maybe there's probably the next 1.2 buy. On a weekly, I would tell you would be a pretty good buy. Yeah, the next buy here on weekly 1.2, this could be a pretty big trade for Alibaba. But that's exactly how you would use this thing to locate the trade. So you can put it in a watch list. You can build it inside of a portfolio. All that stuff is possibilities here. So let's put Hood in here, just see what this is looking like. Hood's already a buy weekly. We're up 89%. So bought this at $10. It's now 19. Matter of fact, where Hood is at the moment is at the other end of the spectrum. It says Hood's in a sharp rise. While it's very strong, intermediate top can occur in this cycle. Use caution entering positions during this phase. So we've actually owned this thing down in this base, and we're able to own it from all the way from October 22. So that better year and a half of ownership, but it's finally starting to move. And it's amazing, especially this 3-2 model has the capability of doing it. Let's go to one. So even here, it's even played out. We had a buy signal here on 3. Let me play around with a couple models here real quick. Yeah, so here we got, if we look at the buys here, if I bring this up really quick, you'll see we had a buy on on January 4th. Just trying to get this right. Yeah, on January 4th, and we sold it for a 40.8% gain on this on a sell signal. But now looks like we have another position on right now. So if I come back here and go to the symbol, we can see right now we've got another 69% gain here. So we got out, we bought back into this dip, and then running it. So we're a lot closer to a sell than a buy here. So that would be interesting. But this would have been absolutely perfect trading. There's chops down here when you're coming, and the best way to avoid this is these chops is to use the weekly models as a buy. So you can see on the short term, we've been in and out of this pattern. The 3.2 model is actually the more stable, longer term viewpoint. So if you want to get into a trade and manage it from there, that's exactly how you would do it. Let's see if I have this. Yeah, so T2 Biosystem, somebody's got up there. Yeah, that's a tough one. It doesn't look. One of the things that you'll see over here, this poor, this says that the models do not work very good on this at all. So that's the other thing. Every symbol in here gives you the effectiveness ratio of this thing, and there doesn't appear to be anything that's good. I'm just going through the models here real quick just to try to find them. Yeah, it's pretty tough. That one hasn't been fun. Yeah, so one of the things you can go in here and you can set up, I don't have any watch lists I do have watch lists all over here, over on the left-hand side. You can set up as many watch lists as you want, mutual funds, anything you want. And you can, so you can also put in price targets that will let you know if it got hit. But these are just different things. So you can build as many as you want, and it's pretty handy to use from that standpoint. You can just actually dump a bunch of tickers right in this box and build a whole watch list. So if you have a list of that Yeah, so you, Todd, you can actually put in like a series of ETFs and manage all the ETFs, all that stuff in there as well. So you just, and what you want to do is research and see, make sure that the models trade well, and then build a portfolio around that. Maybe in one of the next sessions, what we'll do is we'll actually build a portfolio together. We're into this like 50 minutes right now. But this is some of the things that that you can do here from the standpoint of building out some of these patterns. So we can go in here to Apple. Yeah, this is daily Apple. These guys are being attacked from every angle. I think China, Europe, everything seems to be going wrong for Apple at the moment. They don't have AI, and even though a lot of folks are talking about that AI is like just a hype, it really isn't. It is very real. I mentioned the other day, if you haven't watched the interview with Sam Altman and Lex Friedman, then watch that, because it's pretty revealing on some of the things that are coming up in the AI world from chat and many others. As far as that goes, there's quite a few folks out there that are participating in there. Yeah, Robinhood. What we have a complete list of videos and training. It doesn't take a lot of skills to use them, but it does. One of the things that I'm doing coming up as well is we're putting basically a sequence. One of the things that really works good, folks, especially if you have the indicators, you can take the signals out of WaveTech. And remember, everything that's in WaveTech is the components are the indicators. Okay, so I've given you everything. I just haven't given you the rules. Inside of WaveTech, there's 60 basic rules, and to come up to those answers for the buy and sells, there's about 600 variables that are looked at. We run actually, and they're running in just a few minutes, they'll start running, and they run about 10 million calculations every night and then update that platform. It looks a little clunky. We are in the process of rebuilding the whole platform, so that'll be interesting. Yeah, I'm just looking at a couple of questions here. Yeah, so James, as far as setting this up, it actually it's hard-coded the way it's set up. It's just a matter of, there's a bunch of videos out here, and let me just bring up something real quick, since I'm kind of encouraging you folks to spend a little money and to have the sell discipline around. But if you come over to this website, a little stretched funny because of the way I have this screen. Bear with me a second. Yeah, so you can come over here and you go to support, and you can go into WaveTech training. There's a whole series of videos here. You can click on Start Course, and it will actually play all the videos from to walk you through how to get started. And it's actually worth, even underneath the same support tab, you can go to Portfolio Expert University, and you can come over here and you can watch these videos as well, because they have a lot of elements of the portfolio management situation there. So you can go to portfolioexpert.com. They're free. You can get to these without paying for anything. So if you want to watch some of the videos, you can get an idea what the functionality is and all of that. Now, the only difference between the two platforms is actually that one is more sophisticated than the other one, and it can do multiple trading strategies within the same portfolio, where WaveTech can do only one stock on one strategy or model on a stock, where you can do all 8 models if you want on Portfolio Expert. At the same time, you'll have a gazillion trades, but it's a lot more flexible. Yeah, so so once again, you can go to Kendall Report.com/WaveTech, and you'll come into this page here. You can play this video. It's pretty simple to sign up. Like I said, it prorates the amount of days left in the month. So there's not a free trial, but there is some things out there from the standpoint of at least being able to start. It's only 5 days. You got a long weekend. You could play with it and decide whether you want to spend another $100 for next month or beyond. But it's a pretty good. So let's go to so if we come in, I'm just looking here. Yeah, this is kind of interesting. I'm back on this tattoo real quick here. Let me come up. I mean, they might be turning up, but you see there's a lot of noise in this market, and it's mainly because of this low price that's in here. You see this little spike in the algos all happening. Those are what I call echoes, so they're picking up when we go back and build the coefficient. There must have been some big, ugly, nasty down day, and then it's showing that reflection going in the future. Yeah, the beauty, I guess, Natty, the beauty of WaveTech is you don't need to know those things. It's one of my favorite lines coming back up here. One of my favorite lines is sort of like karaoke with auto-tune. It's going to tell you when to buy and sell, and it will do all the management. One of the things I was going to suggest a minute ago, if you have the indicators, you get WaveTech, you can find the stocks that you're looking at and match up what the PPMs and all the different elements were doing when the buy signal was actually signaled out of WaveTech. So you can kind of reverse engineer some of the indicators and start to look for those setups. That's one of the ways to learn how to use the indicators and use them in conjunction with each other. So that would be one way to do it. Okay, folks, we're right at an hour. I appreciate it. I hope you guys found this interesting. The reason why I really went through all the WaveTech stuff tonight is I think it's going to be important whether we're at a rollover point or not. For whatever reason, I get these intuitive kind of feelings. And when I saw the sell-off today, I'm starting to feel that as we come into April, maybe there's some sellers coming around and folks are going to want to take some money off the table. Maybe we'll get a rotation like into another asset class. I still think the mid caps are the best of the best as far as a place to look for stocks. Some of the small cap, there is going to be opportunities there, but they're going to be a little harder to find. So anyway, folks, just remember, no video tomorrow. Be back Thursday live. We'll do some trading and some live analysis. Those have been really fun. I've enjoyed those a lot. So make sure you come in for that. So thanks again for watching. Appreciate everybody being part of this channel. And we shall see you on Thursday.